Which is more important in this market, even though today is an exception? Both are significant, and they represent various investor perspectives. You still want to own the greatest businesses and the most significant topics, in my opinion. That's Apple and Nvidia, for example. They will be effective throughout any cycle. However, cyclical equities and small caps in particular are particularly vulnerable when the market starts to think the Fed will push rates back towards neutral, which includes cost of money, mortgage, and auto loan rates. Therefore, I believe that this is the reason I would still like to place a very informed wager that small caps could do exceptionally well throughout the course of the upcoming year and even from now until the end of the year. We haven't discussed your granny photographs in a long time. Please remind us of your reasoning for liking some of these stocks. Indeed, the foundation of granny shots is the notion that there are various secular drivers of an economy. We want to hold the greatest stocks in those themes. Thus, our original granny shot model examined AI, cybersecurity, energy security, and millennials as a generation. That's actually where the granny photographs originated, along with names like Apple and Nvidia. Nvidia has been on that list since 2019. Therefore, I believe that it's always crucial for investors to locate the finest firms and stick onto them for the duration of the cycle, rather than trading the best names. All right, Tom, nice reminder. I know you're keeping a careful eye on the little caps. They had a nice day. But is it September or not? We had a difficult beginning, but part of that is now behind us. Indeed, if viewers are somewhat perplexed, I believe that's how the next 8 weeks leading up to Election Day will be. It's a really difficult time, in my opinion, since nobody can be certain until they truly know who is in the White House. However, there are some encouraging developments in the works, and the Fed will meet next week. Given the positive inflation numbers and the need for help in the labor markets, I believe the market will gain some confidence in the Fed's decision to make some cuts. We do, in my opinion, trade well going into that meeting and possibly the one or two that follow. Do you think we'll bounce around in the 5,300 to 5,700 level, or does the market want a 50 basis? I believe that a 25 or 50 might be seen as either dovish or hawkish. The key question, in my opinion, is whether Fed Chair Powell conveys that they are certain that we are returning to a neutral course at the beginning of this cycle, and that their announcement is dovish and upbeat. However, I believe that the market may interpret anything the FOMC does negatively if it appears that this is holding them back, and there are even worries about a harsh landing. But I believe the results will be positive. The Fed didn't want people to get very excited about rate decreases, so it seems like their conversation would have been in that direction. However, they appear to be indicating that they are somewhat on a route now that they are there. Indeed, it is correct. However, from the standpoint of the market, I believe that they would like to see the Fed recognize that inflation is becoming less of a priority and that it is crucial to assist labor markets even when they are not experiencing a recession. Therefore, I believe you're correct. If the Fed appears really hesitant to make cuts, there's a potential that everything may be taken negatively. Whether we're discussing the Fed or even the election, or we facing a possible change in the market's narrative. The majority of people should be investors, not traders. We're going to lose visibility soon, I believe. And when you don't have visibility, people get terrified and sit on their hands. However, I believe that investors should feel rather secure throughout the course of the upcoming year. Markets are nearly always higher 6, 9, and 12 months after the Fed has lowered rates during a gentle landing or no landing. Additionally, we know that markets typically rise after elections, so November and December appear to be promising, and I believe both candidates' ideas are sound enough for markets to do well the next year. I believe that there may be some turbulence right now, but after that, everything appears to be going well. Returning to that turbulence, September has been unusual for traders since, typically, when the month begins poorly, it stays that way. However, we are in a unique circumstance. How does it read? Yes, you are correct. If you look at the 10 worst opening weeks of September, you'll see that the market never ended the month on a positive note 10 times out of 10, with September down 22% or more. In actuality, September was a bad month if you counted the 20 worst initial weeks of the month. Though you didn't end the month on a high note, you actually clawed back profits 3 times out of 10 from the 5th day, which would have been Monday, to the end of the month. Thus, I believe it to be an odd season. I might just remark that next week is more significant since the Fed and the put will be involved. That could be the main driver for the remainder of the month and provide significant market support. Let's now discuss some more general topics, specifically the difference between mega and small caps. Nvidia made a huge recovery, and companies like Apple, which is currently, in my opinion, unquestionably leading the market capitalization race, really proceeded to show off their might. Additionally, we have witnessed tiny caps struggle more than some may have anticipated. If technology doesn't return to its previous level of leadership, will we be able to reach new heights? As long as technology performs well in the market, it will be difficult for the rest of the S&P 500 to make up for any real downturn in tech. However, what we have observed thus far, including recent days for Nvidia and Tesla, is that technology is genuinely holding its own, while other equities are beginning to exhibit life in triggers. Yes, but what about the trade expansion? Look at the Russell, your major call. It's obviously down more than 1% so far. It hasn't accomplished much. For example, I kept hearing that you should wait for the Fed to reduce before investing in the Russell. I'm not sure. What are your thoughts? Well, last week was a big week for Russell. Although there is now some profit-taking going on, I believe this is how bottoms appear. Bottoms aren't always straight up, in my opinion. I am aware that energy was at its lowest point and was erratic in 2021. It ultimately reached new highs and then saw a huge increase in 2020. Therefore, I believe the Russell will start for a number of years. There is a strong fundamental argument for owning small caps, even though it seems turbulent, and we are still close to all-time highs. And you still believe that tiny caps might make a big move since they move quickly, even though you're not necessarily staying with the 50% up. Yes, exactly. Investors should keep in mind, in my opinion, that small-cap stocks have been out of style for a while and are notorious for their abnormally strong rises. Over the course of 20 trading days last year, there was a 27% rally. Between now and the end of the year, I believe we may witness something really significant. Perhaps it must happen after Election Day, but I was hoping it would be after the Fed began the easing cycle. However, are small-cap fundamentals becoming more robust? Indeed. Given that the median PE of a Russell 2000 stock is 10.7 times and that financing rates are declining, merger activity is probably going to increase. That's not demanding, really, especially if we're attempting to be valuation sensitive. Oh well, we'll stop there. Nvidia is again back above $3 trillion in market capitalization, building on yesterday's gains. Today is the 2% move. As we just mentioned, Meta is also higher following its Connect conference. Alphabet, Amazon, and Apple are all unavailable today. Aswath Damodaran, the head of valuations at NYU's Stern School of Business, will be joining me shortly to assist in navigating the tech story with earnings just weeks away. It's nice to see you again. Welcome back. Regards, Scott. I'm happy to be back. What do you observe today when you examine the magnificent 7 multiples? I can tell that everyone wants to work for these companies. However, we have reminded each of these businesses of their weakest points over the past 3 months. You could see how high expectations had been established for Nvidia around the results announcement, and what appeared to be a strong earnings report ended up being a letdown. We've experienced 16 upgrades with Apple, so I understand why I was taken aback when one upgrade met my expectations and the next didn't. The search box continues to provide a significant portion of Google's revenue, so we're still waiting for the next big thing. In addition to their successes, these businesses have